Welcome back to the episode of my trading blog, where most of the views come from returning subscribers. At this point, that's definitely true. I'm not making videos nearly as often. But don't worry, today we're going to go over SPY, AMC, GameStop, maybe 10-year treasury bonds, the dollar, and then PLBY, which is really what I want to talk about because that's what I've been actively trading. I haven't really been doing any other trading than that. I took a stab at day trading SPY the other day, and whatever, down $5, who cares? Obi-Wan is sitting it out this year on the SPY 0 days to expire options. You know what? I am too. Let's talk about SPY. This rally has just been wild, of course. Everyone's been talking about. The bulls are getting super complacent. RSI over here is just sitting super hot and heavy and overbought, which is totally cool. That's fine. You get the biggest moves while it's in that zone. We've been having big bearish divergences set up through here where the RSI peaks are lower while the price is setting higher peaks. So you got higher peaks on one side, the price, and lower peaks on the other, which is the RSI. That's the bearish divergence. This typically signals a correction's coming in. We haven't seen it yet. Instead, we're kind of looking at what I'm thinking might be a broadening top, and that's just what reverse triangle and Elliott wave speak. I've got it shown here in blue, and it's not very clean. I typically chart on an hourly time frame with a line chart, but I'll show you the daily candles here. We had this massive pop that led us way beyond the medial line here of this pattern. I called this out on over the weekend, and this was a Monday. Big pop up, and this is when I was just taking a stab at day trading SPY. I bought a 471 and a 473 call, of course, closing up here towards 474. That was a great idea. I sold out early on one of them because, well, it hit a stop loss before the big rally. And then I took 100% profit on the other two. Again, it was chump change. It was just, you know, I call them lottos because they were deep out of money at the time. Only cost a few bucks. Whatever. You can see SPY is now having a hard time getting above that 475 level. There's definitely some resistance here. If SPY fails to cross this pattern and doesn't reach 482, I'm going to call this a partial rise, and this is basically a bearish prediction. If you see this decreasing volume on the daily time frame, we've got big bearish divergence. This could be an impulse wave, this first push down, in which case this retracement, this push up, is going to be corrective, and we'll be looking for more downside, and I'll get to that analysis once we get a breakout, probably looking to get beyond 466.37 before we say anything too bearish, because again, money is just flowing into the markets, reverse repos are coming down, and interest rates aren't going to keep going up, supposedly. Let's move on to something else. Let's just go look at the dollar before we get to the meme stocks. Okay, now this looks a lot better, and this is kind of the same pattern that we see SPY in, but on a different time frame. We're now on the hourly time frame, and I'm showing the line chart because it just looks way better. Let's move on to the dollar. Here we are on the hourly time frame in a line chart. This is basically the same pattern we're looking at in SPY. We've had a big fat rally, and now we're finding ourselves in this megaphone, this broadening top reverse triangle. You call it what you want. Price is failing to set new highs, setting nominal new lows, not really going anywhere, moving a whole lot of sideways. We're gonna wait for a breakout. This is on a different time frame than the pattern in SPY though, and don't be tempted into thinking that you can say, hey, this happened over here, and now it's gonna happen over here in the same way. That's not how that works. You gotta watch each one individually. Here, the story is that we had a big push down in the dollar strength index. There was a massive bullish divergence through here, which failed. On a larger time frame, we got one more low, and I'm saying that's probably C. When you see these divergences fail to produce rallies or, well, you know, dumps, to fail to form reversals, you generally get just one more extreme. Generally, it's pretty rare to get two or three. It just depends on the time frame you're on as well. On the hourly time frame, one is enough. Looking at this now, we're looking for a corrective bounce higher. We've seen the first rally. We've come down. We've reached oversold on the RSI, which is to say that it's come down below 30, which is a good signal that we're at the end of at least the first impulse of that push. And we're finding a lot of support at 102, which is telling me that we're probably going to be looking for another leg up, which I don't like. There's a downtrend through here that the dollar strength is contending with at the moment. Breaking above 102.73 is going to be a bullish continuation signal, and the target is going to be quite high. It'll be at 104 to 104.16, which is ouch. This would be very bad for equities, very bad for SLV, which I'm currently holding a leap on, a call. So I don't want to see dollar strength go up. I want to see it go down. It looks like it really could go up, and if it does, that's bearish for equities in general, especially precious metals. Who knows? Correlations break down all the time. Let's go take a look at the meme stocks. I left my AMC analysis basically on this right-angled broadening formation, if you want to call it that. I'm analyzing as a measured move down, looking for an A, B, C set of waves. And we've definitely had A and B, and we've broken out of that pattern. I said I'd do a chart pattern analysis if we did. I didn't do the chart pattern analysis. I'm pretty sure that target would be around 598, 590. We've gone way beyond that. We seem to be just continuing to extend this downtrend downward to a target that I put down a while ago at 282. And that was probably up here when we came into resistance at the top of wave B. This is a pretty important thing to do, is always take your Fibonacci extension tool, measure that first impulse wave, and then use that extension through the corrective wave, wait for the confirmation at the end of that initial impulse, point A, and then drop your C wave target to wherever 100% is. This is pretty reliable. If it doesn't turn out this way, typically that 50% line is a good place for it to stop. But you can see price bounced there and then just kept falling through. So this downtrend is in full force still, and we might even get a nice big surge down. This is wild. I mean, what's driving this? I don't know. Are retail investors losing interest? Probably. Who am I, though, to say that? I have no idea. GameStop. Here we go. Here's another tale of big retracement rally. We came up to 1810. Pretty good stuff. We didn't hit the target at 1943. I think what I needed to do was adjust this target just a little bit. We had one more price extreme to the downside. That brings the target down to 1896, and we didn't quite get there, did we? Maybe on an intraday time for a wick. We see a candle wick through here, but it doesn't really look like it. That was a good try. Price has now reversed, coming down below the top of this initial impulse, meaning that this probably isn't waves 1, and this probably isn't wave 2. This is probably A, B, and C through here, and we're looking at a new set of 5 going down, a new motive trend, probably coming back down to test 1167. We've broken the uptrend through here, and you can even kind of see there's like, well, let's see here, 1. If this is impulse 1, and this is A, B, and C, and this is 1, 2, 3, 4, 5. Okay, I stand corrected. Okay, here's the thing about GameStop. If this is the bottom at 1191, if this is the bottom, this could be what's called a leading diagonal triangle through here. We've got an impulse wave coming up to form the first touch point of our pattern. Then we have 3 waves forming the second, 5 waves forming the third, 3 waves forming the fourth, and 5 for the fifth, with an overlap between waves 1 and 4 between converging trend lines in wave positions 1 or A. Yeah, that's the criteria. I know it's like, does that even make sense? No, it doesn't make sense. I don't want to explain it. At any rate, this could be a leading diagonal triangle, which would signal that the price is basically going to rip to the upside once it's done retracing. When's it going to be done retracing is still unknown. In that scenario, we'll be taking this extension tool like this, just dragging that through the impulse up through the correction, and saying 1429 is probably about where we'd expect it to go. Again, if we fail to reach there, then 1550 would be where we'd find that support or resistance, and price is already blown through there. That being said, I don't know when that is going to end, or if that is going to occur where we see the leading diagonal triangle produce impulse 1, we're in retracement for 2, and then we see massive rally for 3. Don't know. We're going to have to wait a while. GameStop is not doing nearly as poorly as AMC is doing as a company. And so overall, I'd be more bullish on it. Again, I'm thinking that a lot of retail traders, not everyone's got diamond hands, and so interest is waning, and that leads to some selling, and short sellers probably are gaining courage on that. But again, I don't have the information to say that. That just is kind of what the charts are telling me. The price is the ultimate indicator. It includes all the factors, whether or not you believe they are legitimate, valid, ethical, or otherwise. That's why I watch the price and just the price, and don't follow anyone's wild theories. Remember, the data you get, it's not even that reliable. So, like, you know, price is the most reliable indicator. Now, what I want to talk about, PLBY. In my last video, I was saying that I was excited to get back into PLBY, and it's been a lot of fun because it's just been going up and I've been going long a bunch. And what I want to show now is my Elliott wave count through here and explain what I'm looking for, where I'm at now, and what my plan is here. This is a vlog, remember, so this is kind of what I'm doing here. I'm just vlogging. You don't need to do anything because I'm doing something or just because I said something. That's dumb. You're responsible for your own trades. This is just like for my own benefit. Going back to my old videos is wildly enlightening. Okay, so we're going to take a peek at volume here. A lot of volume coming through here, a lot of volume, especially up through here. I think that's because this is probably wave 3 of 4. Wave 4 could retrace all the way down to 90 cents. That's a big deal and important to remember. Right now, that would be the most bullish count that we've seen waves 1, 2, and 3, where wave 1 extended from 48 cents through 90, retraced down to 70 through wave 2, and then we had that 161-point extension we often see with wave 3 or C, reaching to 147, which we've hit today and which the price is at right now. That's pretty much why I'm out of shares. I'm not totally out. I've got a stack of calls. I've been buying out of the money calls that are out in April, or a few of them are like for in a couple of weeks. It's like January 19 or something like that, like next week. But most of them are out in April, and that's just what I call squeeze insurance. Because if I'm out of shares because I sold when it was high, I don't want to be like missing out. So is it fear of missing out? Yes. It's like a big, massive fear of missing out pill. I take it. It's medicine. If those calls expire worthless, that's the cost of not freaking out about the price, which is kind of what happens in those big, massive surges. And so that's kind of how I manage my mentality through here, because that's really what it is. Trading is all about mentality, and that's what I've learned. Anyway, and so when I see this chart, I say to myself, wave 4 could come all the way down to 90 cents. Big deal. That'd be a great buying opportunity. Oh, it'd be so good. Build up the cash in my account with this rally and then throw it back in at 90 cents and then watch the thing rip again. Jeez, that'd be great. Because if that is the case, then we're looking for a $1 rally coming off of 90 cents, which puts us at $2. You extend that 161.8%, and you're going to find yourself up towards $3. Those calls run in the money. Once those calls start running in the money, you never know. There may be some demand to exercise those calls. That could have a direct impact on market dynamics. I could push the price higher, which I have seen occur with AMC, I believe. And so, after all, remember, the GameStop report that the SEC produced did not confirm that there was a short squeeze. That was not a short squeeze action, is pretty much what we understood. And whether that was driven by retail demand for shares or if that was something else, market mechanics involving option chain stuff, we don't really know. But I kind of think it was. I kind of think that's exactly what happened. And which is why I'm excited to see the price reach up to about 250. I want to see what happens because the options chain's looking weird, looking real weird. Thin, not a lot of volume, but there's still healthy strikes there in the near term that lead quite high compared to where we are now. And analysts are saying that this thing is undervalued, basically, that it's valued up towards $4 or $6, whatever. Of course, I don't really trust analysts, but hey, this is Playboy. This is one of the most recognizable brands in the world. Its stock is at like $1.50, and it makes sense it's down here, waiting a long time for this downtrend to end. It's like 8 months. It's not that long, I guess. And I said, once they sell Lovers, that's it. Expect this thing to rip. And they sold Lovers, and that was the earnings back here. Price plunged. And that's cool. That's fine because the earnings were awful, right? But sure enough, that selling of Lovers marked where we would start to see that reversal occur. And now we're seeing the equity start to skyrocket. And so I just want to say I nailed it. Been trying to make fewer videos so that I can find these things easier. And maybe I'll make playlists and such. But for the time being, I just want to go over this count because that really bullish count I shared with you where we could retrace to 90, that's not necessarily going to happen. We could be in something a little less bullish, but that is still bullish. It's hard not to be bullish on something that's rallied like, 300%. Is that we've basically gone through 3 complete sets of A, B, and C waves. And what that does is that completes a corrective impulse in 9 total waves. And so I'll count those 9 waves now. Bear with me. I think it's, hold on, this is really hard. It's not, well, it's over 3 degrees. So here we go. At the sub-minuet level, we have A, B, and C. We retrace in 3 waves, and we push up again in A, B, and C. We retrace again in A, B, and C. We bounce A, B, and C. Retrace A, B, and C. We push 1, 2, 3, 4, 5. And that's where it gets exciting, is right there. That motive form through there is indicating progress. And so this has to be a larger motive wave. So I called it 1 or A because it can be 1 or A. We don't know if it's actually impulse of a motive trend or impulse of a corrective trend. Probably still corrective because, the price is just barely coming out of a downtrend, really. And we retrace in 3, A, B, and C. and then we come up for A, B, and we have 5 little waves through here. 1, 2, 3, 4, 5. And this kind of forms what looks like an ending diagonal triangle to me in wave C at the sub-minuet degree, which I've shown in yellow here, which tells me that we're probably completing minuet wave C at the minute degree, also wave C. You can see that we've got A, B, and C, A, B, and C, A, B, and C. And those would be the 9 waves, A, B, and C, A, B, and C, A, B, and C, at the minuet degree, which is basically completing many more A, B, and C waves. What is this? 1 set, 2 sets, 3, 4, 5, like 12, I think. It's something like that. It's one of those number things where it's like multiples of 3. At any rate, when I measure the height of the first set of 3 at the minuet degree, and then I take the retracement, the extension tool at 161.8 brings to 147, which is why I think we're kind of done here. And if I zoom in, you're going to see that we've got our Kerr sell signal here showing us that, yeah, we're selling off now, right? And that's okay. I'm totally happy with that. I've taken my profits, waiting for price to come down. I'm going to zoom into the minute time frame here. You're going to see price popped up here to about 152. This is beautiful. I love to see that. And now we're seeing a big downtrend start to occur. This is the reversal I was kind of hoping to see, because I sold a bunch yesterday. I sold a bunch today. I want to get back into buying this, waiting for this to retrace. So what's the plan for retracement? That's the question, right? Let me open up a daily time frame here on a candle chart and open up my retracement. This is what I'm thinking. You can see that we're going to have a high volume day today. Already above yesterday's volume. We're going to be above the days prior. It's going to be a big day. Most of it's probably going to be selling. Kerr sell signal is going to be high. RSI is going to set a high. We're going to see the MACD probably peak out. This is all going to be looking bullish until suddenly it's not. That could be today. We're getting a high wick on this volume right here, and it's happening in this gray zone. When I zoom out, you're going to see what that gray zone is. Look at this. It's a price knot. This is where price tends to get caught and has a hard time moving through, but once it moves through it, look what happens. Look at that massive downtrend and this beautiful bounce we've gotten from that low. What I'm thinking is, at this point in time, we're looking for retracement. And so the first thing I did is I said, hey, throw in the channel. There's the channel. If we get a big plunge down, I'm kind of looking for the intersection of that uptrend and an important level of support and resistance. 109 looks good. So I've got a buy right now on 109. You never know. Price could get there in a hurry. I wouldn't think it might do it today, but look at this candle back here. This is wild. It's got a low of 81 cents and a high of 109. That's 19 plus 9. That's 28 cents when the price is like at $1. That's like a 30% price swing. Like, what? That's huge. So I'm leaving the buys down there, the buy orders. I might put a buy order at 128. It's probably what I'm going to do is put buy orders on all these levels and just wait and see which one turns out to be the best opportunity in the moment. But here we go. We've sliced through this downtrend, and we haven't really back tested it. We haven't come down and touched it. We did once on an intraday time frame and then just kept pushing, but I'm kind of expecting to see price come back down here and at least get close to the breakout price near 96 cents. So I've got the breakout price there at 96 cents. What else do I have? I have a 61.8% retracement at like 88 cents. I've got support and resistance at 89 cents and the 50% retracement at $1. So between 88 cents and $1, this is probably a good spot to get back into it. I'm hoping for this. This is what I plan on, is riding through A, B, C, D, E, and then we would get our next push up and out if I'm lucky, you know, and that's where I'm looking for the big gains to really come. And with any luck, that'll all happen before February 22nd. That's just simply measuring the length of time it took to get to here, which I'm supposing is the top. And I'm just doubling that to say, hey, the corrective trend is probably going to last just as long. And then whoosh, price skyrockets. If this is what happens, which is kind of what I envision happening, again, this is just pure speculation and means nothing. 263. Boom. The 250 call strike goes into the money, which is important. If other things are to happen, that will lead the price to fill a gap that is up here towards $3 somewhere. If I could find it, there it is, $3.21. So coming to fill that gap would be good. And I'm sure there's other price gaps too. Like here's a little one that didn't fill up towards $5. There's a big one right here at like $7. Yeah, you can see I'm losing my scale here, but I'm just looking for price gaps. So anyway, at any rate, you can see on the larger trend, the long-term view here, what I've drawn there is not like too far-fetched, right? In fact, that would just be a nice little corrective rally for this huge downtrend. Look at this thing. It started at like $45 and it came down to 48 cents. Like, what? Go, 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 go. And then the short sellers just got so happy. Wow. Okay, and so that's my whole thing about Playboy. That's where I'm at now and what I'm doing. And I'm going to go check on the minute chart here. Yeah, it looks like we're finding some resistance. All right, this is way longer than I thought it would be, so probably take forever to process. Who knows if I'll get it up today. Happy trading.